The U.S. Fed raises rates by an expected 25 basis points to 5.25 to 5.5%, the highest level in 22 years. Chairman Jerome Powell stresses on a data-driven approach and leaves the door open for a hike as well as a hold in the September meet. Stocks closed mixed on Wall Street with the S&P 500 and the Nasdaq correcting, while the Dow has now gained for 13 straight days. Stocks in the Asia-Pacific trade largely higher following the U.S. Fed's policy decision. The GIFT Nifty also indicates a positive start for the Indian market. Tech Mahindra reports a very weak Q1 as margin contracts, while the revenue decline is the highest among peers. Axis Bank reports an operationally weak quarter, while Tata Consumer's numbers largely meet estimates. Dr. Reddy's, meanwhile, reports a big beat on expectations. And Jio Financial Services ties up with BlackRock in a 50-50 joint venture to enter the Indian asset management industry. Both partners will initially invest $150 million into the venture. A CNBC TV18 news break is confirmed. Mahindra Group confirms it has acquired a 3.5% stake in RBL Bank for 417 crore rupees, says it may consider hiking the stake, but under no circumstances will the total holding exceed 9.9%. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra. Those are the top headlines that we have for you this morning. The big global Q is out of the way. The Fed has gone ahead and done exactly what was expected with that 25 basis points hike. There's not really much that has come through in terms of a changed guidance as well. And on the back of that, you had a pretty mixed, close on Wall Street. It did get a little bit choppy after that announcement. But Asian markets, to start off, are doing quite well. So you have all of the Asian markets which are trading well in the green. What's doing the best this morning is the Korean market. So the Kospi is up 0.8%. Hang Seng, like you can see, is seeing gains of around 140 points. So doing very well there as well. The Taiwanese market up around 0.5%. The Nikkei is absolutely flat, but barring that, for all Asian markets, you're seeing at least half a point in terms of a gain coming through in early trade. So looking quite good to really start things off. The GIFT Nifty will also come up for you, and it is indicating that after that good session that we had yesterday, once again, we're going to start well in the green. Around 78 points higher is where we're at as far as the GIFT Nifty goes. So looking quite good as far as the start goes. But let's also talk about the U.S. markets, because Wall Street ended yesterday's trading session mixed. So the Dow Jones finished 82 points higher. That rally really continues, and it has now risen for a record 13 straight days, while the S&P 500 closed absolutely flat, like you can see, and the Nasdaq also saw a little bit of a move lower. All of this, came as the U.S. Fed hiked rates by 25 basis points. And addressing the media after the announcement, we had Chairman Jerome Powell, who did not really give any kind of clear indication as to what the Fed's next move could really be. But we have Steve Leisman here with us to bring us more from that. Steve.
The Federal Reserve, after that one meeting pause, was back at it again, raising rates in July, increasing the funds rate by 25 bips to a new range of 5.25% to 5.5%, is the highest level in 22 years, as expected. And Fed Chair Jay Powell, in his press conference, did not provide very much guidance at all as to whether the Fed is done or whether it has more work to do.
I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting.
The Fed's statement did hint at more hikes to come, saying the Federal Market Committee, which sets rates, is, quote, determining the extent of additional policy firming that may be appropriate. So kind of leaning that way after the statement and the presser. The futures market traded with a 22% probability of a hike in September and 38% of a probability of a hike in November. A sign the market believes if the Fed is going to hike, it's likely to skip a meeting again. On the plus side, Powell spoke pretty confidently about the chance of a soft landing for the U.S. economy.
Consistent with having a soft landing, you would have some softening in labor market conditions, and that's still likely as we go forward with this process. But it's a good thing to date that we haven't really seen that.
All right, the next critical steps now, as Powell said, 2 inflation reports, 2 jobs reports before the Fed has to make up its mind again about what it's going to do next. And of course, guys, there's that speech next month by the chair in Jackson Hole, which we'll all be listening to.
All right, so a lot of important data to track before the next Fed meet. And then, of course, we will get the decision. Like Jerome Powell pointing out, it will be a very data-driven approach. But after this important cue did come through, we also spoke to a whole host of big voices on what they really make of the Fed's decision. So listen in to some of that important opinion.
The Fed is not behind the curve. They have moved rates at a very brisk pace in the last 15 months into what they and we think is restrictive territory. They've pushed back on the idea that they're on the verge of cutting. I think the Fed is close to where they're going to need to be to put inflation on a path down towards 2%. But again, the chair, I think, will leave his options open to go at the September meeting, to skip the September meeting, to go later in the year.
You know, he was very specific, I think, on data dependence, no forward guidance. September is really about these next two CPI reports, the next two pieces of payroll data, a little bit about that wage data. And then he kind of even pulled it back and said, really, it's the inflation data that's the primary driver. So I think he laid his groundwork pretty simply for September and really tried to steer away from anybody's questions on what's coming for the rest of the year. A lot of people quizzing him on rate cuts for next year and whether those were, likely or unlikely. And he said, of course, a few people are projecting those in the SEP. But, I don't think he gave us a lot. He just said September could go, could not go, and it all depends on really two pieces of data.
All right, that is some important opinion coming in. But with that, let's also talk about how all of these cues that we just spoke about from the global markets impact us and all of the individual stocks that you should keep on your radar today as well. We have Rima, Surbi and Nigel joining us with the trade setup this morning. Guys, a very good morning to all of you. Rima, let me come to you first. The screen that we have, right now, whether it's Asia, GIFT, Nifty, all looking very strong.
Yes, absolutely. So while the U.S. markets closed flat, Asia has picked up a fair bit because that big event is now out of the way. For our own markets, the good part in yesterday's trade is that there was finally some momentum, some green on the screen on the index. After we went precariously close to the 20,000 mark, the markets were consolidating. We hardly saw any change on the index, but finally it appears that the index started to move and the Nifty came very close to that 19,800 mark. Today we've got the July expiry as well. So can it help push us higher towards, once again, closer to the 20,000 band? It's going to be about individual stocks. So we've got a lot of stocks to react to in terms of news, whether it's Reliance because of the GeoFin BlackRock, Tech Mahindra is earning, Axis Bank's numbers, which was slightly lower than what the street was anticipating. But on the other hand, you've got Colgate, Tata Consumer. So the activity is going to be more on individual stocks. But the index finally appeared to have woken up yesterday and made a push. And the big cue today is going to be the July expiry. In terms of flows, both the FIs and DIs were buyers in the cash market. The FIs bought 970 crore while the DIs bought 470 crore. Back to you.
Okay, Rima, thanks a lot for laying out all of those cues for us. Let's also talk about some of the individual names that could really be in focus in today's trading session. Surbi is here with the list. Surbi, we're in the thick of the earnings season. A lot of the Nifty earnings post-market close yesterday, and some of them really not looking too good.
Yeah, that's right. They're not looking too strong. Let's start with Axis Bank. Now, operationally, it was a weak quarter. The net interest margin is the lowest in the 3 quarters. And sequentially, operating profits have declined by nearly 4%. Techem, again, a big miss. The dollar revenue was down 4% sequentially. And the EBIT margins have come in at 6.8% versus 9.6%. Tata Consumer, it was an absolutely in-line result. The revenues have come in at 3,741 crores. And the EBITDA has come at nearly 545 crores versus a poll of 535 crores. Colgate, it was an all-round beat. Revenues have come in at 1324 crores and margins have come in at nearly 32%. Dr. Reddy's, again, a top-down beat. The revenues were up nearly 30% and the EBITDA margins have come in at 32% versus 34% same time last year. Apart from that, M&M and RBL Bank will be in focus because M&M has said that they've acquired 3.53% stake in RBL Bank and also they may consider raising stake in RBL further, but they won't exceed 9.99%. And lastly, RVNL will be in focus as government announces OFS for the company and they may sell up to 5.36% stake in the company.
All right. Thanks for that entire list of stocks, Surbi. We're going to watch for all of these in today's trading session. Finally, it's over to Nigel. Nigel, how are things looking on the F&O side?
Well, it's the expiry day, and if, in all probability, by the looks of it, we're definitely going to be ending in the green. So it'll be the 4th straight series where we end in the green, and that's the first time in the last 6 years or so. So a bit of record-breaking today is what we're bracing for. What do the FIs do? Well, yesterday they added more longs than short positions in those ratio of close to around 3 longs, 2.5 longs odd for every 1 short position. And now the long positioning is at around 67%, but luckily it's not at that 80-85% odd, which tells you that the market's getting a little too complacent. They wrote more puts than calls as well, and I'll read that positively, getting into an expiry day. And the most active strike yesterday was around the 19,750 put. It added more than 45 lakh shares odd, premium at around 44 rupees. Given that that was being written, well, you're looking at the near-term support at around 19,700. And at the 19,700 strike, the PCR is at around 2.8, telling you the number of puts that have been written are way more than the number of calls and gives you some confidence that that level will hold out. So on the downside, 19,700 becomes a crucial support. On the upside, yesterday we went to around 19,830 and from there we did see some selling. So today, the bit of a resistance zone comes in at around 19,840. Now, the GIFT Nifty suggesting a 50-point gap up. We need to hold on to those levels. In fact, the 80-point gap up. So we'll be starting above yesterday's high. We need to hold above those levels and then, in fact, maybe brace for a bit of a move towards 19,900. But holding on to the gap up is going to be most crucial. Back to you.
All right, let's see if we can do that. Nigel, thanks a lot for laying out all of those cues. That is the trade setup for today. But with that, we do need to get into a short break. On the other side, like we've been telling you, Axis Bank and Tech Mahindra posted their Q1 results. So we're going to bring you the fine print in just a bit.
Some of the challenges are
Welcome back. You're still tuned into Power Breakfast, and let's talk about some of the earnings that came through post-market close yesterday. Tech Mahindra was the first one that we're looking at, and we saw a miss on all fronts for Tech Mahindra this time around. The constant currency revenue declined over 4%, while profits are down 38% for the tech major this time around. Rima is back with us with the earnings fine print. Rima, anyway, what was expected was quite weak, but this seems to be well below that as well.
No, absolutely. It's not that any IT company came out flying and came out with good numbers. And the street was expecting weak numbers from Tech Mahindra, but this turned out to be much weaker than what the street was anticipating. Their revenues have fallen more than 4% on a quarter-on-quarter basis. Communication. Tech Mahindra gets nearly 40% of its revenues from the communication vertical, and that has seen a revenue drop of 9.4%. So it's been a very tough quarter for Tech Mahindra. Margins too have fallen. I've never seen 6.8% margins on Tech Mahindra, so a sharp contraction seen in margins. In fact, Tech Mahindra's margins at 6.8%. There is a one-off element, 200 basis points in account of a provision, but even if you account for that, the margins of Tech Mahindra are much lower than other peers of similar size like HCL Tech, Wipro or LTI Mindtree. Deal wins too have come down very sharply by about 39% on a quarter-on-quarter basis. UBS says it's an underwhelming performance by Tech Mahindra. It's not a blip. So they're expecting the underperformance to continue. They have a sell call on the stock, while Nomura believes that Q1 is the worst. So perhaps we've hit a bottom, and considering the valuations are relatively cheaper, they've got a dividend yield, they're going to go with a buy. But there is no taking away from the fact that Q1 is a big miss compared to street expectations on revenues and margins, and brokerages have lowered their EPS estimates by nearly 10% for the current year. Back to you.
All right, Rima, thanks a lot for taking us through all of those details as far as Tech Mahindra goes. This will be an important stock to watch for in today's trading session. But like Rima was pointing out, let's also listen into what the management, CP Gurnani, had to tell us after the earnings came through.
Some of the challenges are temporary. We will bounce back over the next few quarters. This quarter probably is one of the toughest quarters I have seen in the last 5 years, but we believe that we will be able to bring back a growth trajectory over the next few years. We have a great service offering, we have a great team, we have a robust pipeline of opportunities across all geographies, verticals and service lines.
All right, that is the management of Tech Mahindra. But sticking with earnings, Axis Bank also posted its numbers after market close yesterday. So Abhishek is here with the fine print. Abhishek, this one also posting a weak quarter.
Well, Pavitra, it's an operationally weak quarter for Axis Bank. Take a look. It might be the only lender to see increase in its watch list by quarter on quarter. So quarter on quarter, the watch list has increased by more than 5%. Core operating profit, that's declined massively by more than 8% on a sequential basis. And if you compare with peers as well, this is the highest decline that you are seeing. Kotak Mahindra Bank saw a decline of 6.75%, HDFC Bank by about 0.75%, while ICICI Bank had seen a growth of about 0.15% sequentially. So operating profits have continued to decline quarter on quarter for second quarter in a row. Net interest margin is at 3-quarter low. Operating profits declined by 3.9%, perhaps the highest decline in the last 4 quarters. P&L, both the NI and PAT is below our poll. Good part about the result is that the advances growth is strong. 22.5% YOY is perhaps the highest growth that you are seeing in last 28 quarters, courtesy the fact that they have acquired Citi's business as well. So YOY growth looks strong, and gross NPA ratio at 1.96% is perhaps the lowest in last 32 quarters. Back to you.
All right, Abhishek, thanks for taking us through the fine print there. That is Axis Bank. But with that, let's get into a short break now. On the other side, we're going to shift focus to the world of commodities, tell you what's going on after the US Fed hike came through. So stay tuned for that. Welcome back. Let's take you through all of the commodity market action as promised. Manisha is here with us. Manisha, we were just talking about it on the show. The Fed has gone ahead and effected that very expected 25 basis points hike. What has that meant for the commodities?
Well, Pavitra, the markets also are believing that the inflation will ease from here and the hikes in rates going forward will also not happen. So that is what has been supportive. That has taken the US dollar index slightly on the lower side. We've seen gold prices gain up by more than 0.5% overnight. There also is a JP Morgan report which says that in next 12 to 18 months, you will see newer highs in case of gold prices. So a lot of support coming in from that in the precious metal prices. The support has continued for energy as a market. We've seen crude oil prices trade at a 3-month high. We've seen 15% of gains in last 4 weeks in crude, and not just crude. Heating oil is trading at a 5-month high. Gasoline prices are trading at a 1-year highs. The markets have seen a decline in U.S. inventories, and prospects of tight supplies and better demand estimates going forward has been supportive for energy as a sector also.
Okay, Manisha, thanks a lot for getting us all of that action from the commodity space. With that, let's also quickly bring you up to speed with all of the monsoon updates from across the country. The IMD has issued a red alert in Mumbai as the city is likely to receive heavy rainfall today. So all schools and colleges have been shut and citizens are urged to remain indoors. NDRF teams have also been asked to, remain on standby to avoid any possible mishaps. The monsoon mayhem also continues in the north part of the country, so several regions of Uttar Pradesh are reeling under waterlogging. And according to IMD, the rainfall is likely to continue in these regions up until the 31st of July. So here's, asking all people who can to stay at home and to stay safe. But with that, we do have to wind down on this edition of Power Breakfast with the news that Asia is looking good. The GIFT Nifty indicates an 80-point bump up right at the start of the trading session. So let's see if we can hold on to those gains. Thanks for tuning in. We have Bazaar Morning Call up in 2.